Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right. So Darden Restaurants, chain with, I don't know how many different brands, probably 10 different brands, Capital Grill to Olive Garden, some of the others. But it's lagging this year. It's down about 2% in 2024. Are we starting to see that impact of inflation, and not maybe only on Darden, but people going out? Because, Landon, those prices aren't going down. They're actually leaping higher and higher above inflationary numbers that we get on a monthly basis, where, it's not conducive when everybody's purse strings are getting tightened here.
Yeah, you're right. And Darden is basically Olive Garden, Longhorn Steakhouse, Cheddar's, and then a bunch of more like higher end, right? More fine dining, Roost Chris, Capital Grill, Eddie V's, things like that. And those are the ones that are really getting hurt. I mean, that's the ones where, costs go up, and then all of a sudden, you're thinking about going out to dinner with, you and your wife, and you're talking a couple $100. You have some drinks, and that's tough, right? That's a tough thing to sign on to, especially if you're taking more than, two people. So the fine dining is definitely getting hit. Olive Garden was definitely weaker as well. They were, they had weaker numbers come in. Longhorn was the one that kind of is continuing to save them, or continuing to put out good numbers, plus 4% on same store sales. And one of the things that I think is really interesting is this acquisition of Chuy's coming in. So you can see Chuy's at the top of the scale here for the change in web visits. Now, a little caveat here. This data is looking at people going to the website. So you're going to have less people going to a place like Roost Chris, because that's generally you go into the website to make a takeout order or maybe place a reservation, but you don't do a lot of takeout orders at Roost Chris, right? You don't do a lot of takeout orders at Longhorn. So that's a little bit of a caveat on that data, but you can see why they're interested in buying Chuy's. They're growing very rapidly. They've got, I think, 101 stores or 101 restaurants in 15 states. And you can see the website data is very strong there. So they're adding that as one of these casual restaurants to their list of other casual restaurants. So very bullish on that, guys. If you haven't been to Chuy's, by the way, this is, it's just a little sales pitch. They got the best chips out there. They're like thin, but firm enough to hold the dip. So they got their chips nailed. But when it comes to Darden restaurants, they're hanging around 160, and they're trying to do a lot of different things, right? I mean, they brought back the all-you-can-eat pasta bowl, and the never-ending pasta bowl, at Olive Garden in August. Longhorn Steakhouse is doing a really good job with consumer satisfaction. They've actually got the highest rating of any restaurant that they were surveyed. And I think a lot of that, people talk about the free birthday desserts. They talk about the great value. We even saw a lot of mentions on social media comparing them to Five Guys for whatever reason, saying that they can take their family out to eat at Longhorn and actually pay less than going to Five Guys, which is incredible. Because it's a sit-down steak place, and obviously it's very different than a place like Five Guys. But people are really looking for value right now, which is why they're doing that never-ending pasta again. And I think that why the Chuy's acquisition is good. So I think that right now you've got Darden as two different segments. You've got the casual, and you've got the more fine dining. Both of those are going to be helped when the consumer is able to loosen up a little bit. We'll see. I think that interest rates obviously are going to play a big part in that. But going forward, if we can get a little bit looser consumer who's able to spend more money, that's going to be good for Darden restaurants and all restaurants, frankly. But right now, I think that they're kind of just hanging in, and where they're at right now, the stock jumped recently, like about a month ago, so now they're up to 160. They were much lower, kind of in the middle of the 1-year range. And going into this earnings report, I'd say that we are on the just very slight side of bullish, barely slight side of neutral on bullish. But overall, good company with a lot of different segments, a lot of different restaurants, a lot of different brands. And so they're able to capitalize and move things around. If fine dining's struggling, they can go down to casual. And if casual's struggling, they can upsell, or they can take that opportunity to go to fine dining. So they've got a lot of bases covered. But one of the things, again, I'm most excited about is to see how this Chuy's acquisition plays out.
Landon, I love when my research and yours lines up, because as big as this company is, as big as the portfolio is, it's really a Olive Garden and Longhorn Steakhouse firm right now. Those are the two drivers, and they seem on the surface happy with their acquisition of Roost Chris, but not yet by the data. Not so good to start off there. I'm sure they're going to make some adjustments, but when 920 locations for Olive Garden, 575 locations for Longhorn Steakhouse. Longhorn Steakhouse doing well with virtually no promotion. All they're doing is kind of putting out the fact that, urban legend is coming around saying that you can eat there for cheaper than Five Guys. And guess what? I believe that story because Five Guys is absurd how much it costs to eat there. So the question is, it's sold off twice after the last two earnings events, and like you mentioned, it has rallied. Are we setting up for another disappointment here?
Yeah, I will tell you that, I played around with our calculator on the back end, and the number, the number for this earnings report is plus 26, right? It's slightly bullish. If you would use the prices from about a month ago, we're much higher. We're in the mid 50s. So a lot of this move recently has pushed us much closer to neutral. And I don't want to use the term gun shy because officially, plus 20 is where we draw the line. We're willing to take a bet. So at 26, we're willing to take a bet. But yeah, just looking at the last couple of earnings reports and seeing this move, I think expectations have definitely gone up. And so this is about as weak as we can be while still being bullish, if that makes sense. But yeah, I definitely think it's a concern seeing how they've reacted. And, this is, despite the huge portfolio of names, it really is, a 2-restaurant company. And those, Olive Garden's been struggling a little bit. Longhorn's been killing it. And they're trying a lot of different things. They've got Chewy's acquisition. They're trying to get other things going, trying to get the Roost Chris, that acquisition to shore up and look like a smart decision. It's not there yet. But right now it's just those two. And so it's really going to come down to how the consumers are reacting to those. And based on what we've seen, Olive Garden's kind of pulling them back and Longhorn is, pulling them forward. So we're going to see what that balance looks like. I have a feeling in the future those restaurant numbers are going to skew. There's going to be more and more Longhorn in the future.
Yeah, Landon, when you look at this, happiness levels, it seems like they're elevated according to your data across, multiple parts of their business. But at the same time, is this a story about, hey, if they're showing weakness, maybe in a couple of them, and Texas Longhorn, Longhorn Steakhouse does well, that this might be reflective of what's going on for the overall consumer, globally, as far as going out anymore, because you have seen traffic decline, right?
Yeah, so I think that it is a good indicator going forward when you think about what you're looking at. You have to think about what you're looking at. So Olive Garden and Longhorn are both casual dining, right? And I think that is going to encompass. That's going to mirror much of the casual dining out there. Now, when you get into some of the other restaurants, Eddie V's, Capitol Grill, Roost Chris, all that, that's going to be a lot more dependent on how strong the consumer is and what those wallets look like. But yes, I do think that you're going to be able to take Darden's earnings and kind of project them out onto other restaurants in the same space, like Texas Roadhouse. Absolutely, one of those is going to go right along with how Longhorn's doing. And if you notice on that happiness chart, I think those were the top 2 companies. So people love steakhouses where there's a strong value, right? Where you can go in and you can get your filet for whatever $35, but you can also get a burger for $12. And I think that people really like the flexibility when you go to those kind of restaurants. So this is an important earnings report, I think, for just restaurants in general. It doesn't give us a lot of insight into fast casual. They don't have that segment, but for casual dining and a little bit of the finer dining, it will give us a good insight into the market overall.
Yeah, and as just noted for disclosures, Kevin and I, after an event in beautiful Anaheim, California, we went to the Ruth Chris down the street, more than half empty on a Friday night.
Food was good.
Yeah.
Beer was cold.
Yep.
But the place was half empty.
Yeah. We'll have to wait and see.
Tough.
Great stuff. Great data as always, Landon. Appreciate it.
All right, guys. Take care.
Out there doing our research, Tom. That's all we're doing.
Yep. Landon Swan, LikeFolio. I mean, I can see why they'd be a little bit more positive.